everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, inflation is exploding higher, at least as evidenced by the October CPI report. Is the Federal Reserve to blame, or are there other factors at work here? Interest rates have reversed course and are now moving to the upside. And the dollar is surging higher. What does all this mean for the markets? Let's take a look at the charts. At the time of this recording, it is late on Friday evening, so currently the futures market is closed. So if we take a look at the SPY, you can see that we did consolidate this week, which I think is pretty healthy, considering last week we had gained some separation from the 10-day moving average based on that vertical move. So we've corrected that. The market's moving to the 10-day moving average. In fact, we have a little triangle that's formed here, so as evidence of consolidation, and that's pretty healthy actually with a vertical move without more pullback from here. And I think that gives us our next two targets, because when we look at this, I'm going to go ahead and take the moving averages off here. I remember back when we were talking about the zigzag targets at 420. People thought we were crazy then. Well, we did have some resistance at 420, so I think you make a pretty good case for a zigzag starting with an impulse from that pullback of the 420 level, and that gives us a C-wave extension up around 476. Well, when you look at the mouth of this triangle, a break to the upside would pretty much put us at that C-wave extension, or a break to the downside, perhaps we come back and test that 61.8% fib extension level. Wouldn't disqualify the upward pattern at all, even if we pulled back to the 61.8% level. But I think that gives you your next two targets in the market. Looking at the weekly chart, you can see that we didn't get follow through here. Talked about that last week where we had the break above that 460 level, the 100% extension. We were going to see, could we possibly go to 161.8, but no follow through bar this week. We'll keep an eye on that in future weeks. Going back to the daily chart, I did want to show you the DMI, because the DMI is pretty strong considering the fact that we consolidated for a week. Not a whole lot of damage was done to the DMI, so it's still supportive of a potential move to the upside. In the intro, we talked about interest rates had reversed, and you can see that they broke to the downside, but just to a wave 4 50% corrective level, and just above this area of support around 14 that we had previously discussed as well. So it made sense that that's a point for interest rates to turn back, and boy, did they reverse in a big way. So when we look at that and we compare that with the dollar, which as I mentioned also in the intro is surging to the upside, that brings that inflation question into being. And look at the consumer price index. The CPI jumped 6.2%, the highest inflation surge in over 30 years. And when you strip out food and energy, which I hate that when they do that, they call that the core CPI, and they say that's a truer view of inflation because it ex food and energy, and they take those out because they're more volatile numbers. But I think that's bogus, because we still eat and we still have to put gas in the car, so we're still paying those prices. So why do they say that taking that out is a true reading of inflation? Not a true reading to our wallet. If you want to smooth the number out, just do a 3 or 4 month average, but we still are paying those prices. So I hate that whole core CPI BS. Anyway, but don't get me started there. We spent a lot of time talking about that. Something else that I wanted to show you, because this goes to consumer sentiment. It's the lowest in 10 years, and workers quit their jobs in record numbers this past month, which is interesting because the initial jobless claims number was actually a tick down. Probably won't be that way next month. A lot of people watch consumer sentiment as an indication of the health of the economy as the consumer spending, because consumer spending drives the economy, or at least a big part of it. Does that mean we're going to have a disappointing retail sales season for the holiday season? It'll be interesting to see how that plays out. But that begs the argument on this whole inflationary case. The opposite argument is that inflation is not being driven by the excess liquidity being put into the economy by the Federal Reserve, which I've argued, and I think that's part of it. But another argument is the fact that we're dealing with supply shortages, and that's driving prices up. A lot of other people talking about that as why the Federal Reserve keeps saying that it's going to be transitory, because these supply shortage issues will work themselves out and then those prices will come back down. So I went and talked to a number of industries, owners of businesses in autos, in solar panels, etc. And they all told me the exact same thing, which was eye-opening. I said, hey, the supply shortage is getting better now. Are you starting to see more supply coming in? And every one of them that I talked to in all these different sectors said the same thing. No, in fact, it's gotten worse. So even if the supply shortage is helping to boost inflation, is it going to be here longer than expected? I think it's already been longer than expected from the Federal Reserve standpoint. But it's a good argument. So I'm curious as to your point of view. Do you think this inflation is transitory? Do you think it's from the supply side? I think, and this is a politically correct answer, right, which people are going to hate, but I actually think it's a combination of both. But my argument on the supply side is that if the shortages last for a lot longer than expected, inflation's still going to be here regardless of what the cause is. So anyway, leave a comment under the video. I'm curious as to your point of view. Is inflation here to stay? Are we going to be worrying about rampant inflation in the future? Or is this a short-term thing and it's going to move to the downside? I thought we'd take a look at a couple different markets instead of looking at some of the international markets, because here's another argument as far as inflation coming back down is the fact that energy, right? Food and energy, they take that out of the regular number except when it works for them. Oil has calmed down following a big move to the upside, but I'd argue that that's a pretty healthy correction as well following this big move to the upside from oil. So just a nice sideways consolidation, perhaps getting ready to make another run to the upside. We are below the 10-day moving average, but forming a little bit of a triangle here as well. So we could be getting ready to see another breakout in oil in the not too distant future. And so then we look at natural gas, and it's also corrected a bit. So the softening of these energy prices should help to bring that number down in next month's reading. But in natural gas as well, we only hit a 50% corrective level here. So just a normal wave 4 correction. So we could be getting ready to turn back to the upside in natural gas as well. Weather has been favorable. You're not going to have energy prices surging when it's 70 degrees in New York. I also thought we'd take a look at gold. Look at that move to the upside. So you've got the dollar moving higher, you got gold moving higher. Sure seems like somebody's worried about inflation down the road. And gold, pretty good consolidation here too. Some of these are really impressive consolidations, how they're holding their gains and consolidating more in a sideways fashion rather than a reversal back down. I thought gold might be one of those that could come back down. You know, I always talk about I don't like it when things go vertically up because they can come vertically back down, but so far it's just gone dead sideways and is allowing the 10-day moving average to catch up from what was a very overbought scenario just a couple days ago in gold with this vertical surge to the upside. So gold holding in there really well. One thing else that's consolidating is Bitcoin. And you can see that we completed that zigzag pattern. We talked about that in the last recording, and then we had this triangle. Now look what's happened. So from the breakout of the triangle, we have come back and retraced that. That is classic Elliott wave stuff. You complete a zigzag to the upside, you go into a corrective symmetrical triangle. Really just typical stuff. Exactly what it's supposed to do. You get the breakout of the triangle. Now once the triangle breaks out, it's going to get retraced. And that goes to the same thing as gaps. Gaps get filled. But we don't know the timing. Sometimes gaps get filled immediately. Sometimes it takes a while. Sometimes the triangle breakout retraces immediately. Sometimes it takes a while. In this case, it came right back down. So here's the point of the triangle on Bitcoin. And as long as we stay above that level, then it means the breakout is still good. And we're trading right now a little bit below where this closing price is at the current live market, but still above that point of the breakout. Well, again, we stay above there, still bullish on the wave 3 to go to the extended level at 161.8 in Bitcoin. If we break below that level, then we have to look at perhaps we are going to come back down to the 61.8% extension. So kind of a little bit of the same type of a setup with Bitcoin as we have in the SPY, which is interesting. We have a bit of a triangle with two potential levels of where we could go from there. Taking a look at the VIX, we've come back down. Interesting that we moved down today on really not a whole lot going on in the markets. It wasn't that big of a day one way or the other, but a pretty good drop in the VIX. And I think that should go back and take a look real quick at volume. And you'll see what I'm talking about as far as we had kind of low volume here at the end of the week. And I think a lot of people took a 4-day week with Veterans Day. And by the way, happy Veterans Day to all of our veterans out there. Thank you for your service. We really appreciate it. But I think that with that, on Thursday, kids out of school, etc., a lot of traders took the weekend off. So Monday could be a very interesting day in the markets. Perhaps that's when we break out of that triangle. But looking at the VIX, we're back down towards that 16 level. I'm not sure that 16 means as much anymore now that we've come down and tested 15 twice. So the low on the VIX now is 15. So I'm going to go ahead and erase that 16 line. That's the one that we look to for support on the VIX to see if volatility returns to the markets. And as I said, good return on Monday when I think we're back to full volume in the market. So interesting discussion here, this whole inflationary thing. Again, don't forget to leave a comment, and please hit that like button, or better yet, hit subscribe and you'll be notified immediately when one of these videos is posted. It's helpful and we really appreciate it. Thank you. Have a great weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.